of profit and loss. So the statement of profit and loss, this is what you actually do. It actually says selling, and then it says cost of sale, and then it says overheads. So that's how it looks like. So selling will be total cost, total revenue that you make, and then on this is where you use, whether if you're selling via bank, you use your bank statement to determine how much money you have collected when you are doing this selling, and then also you use a statement where you can determine how much cost did you use. So what is considered a cost of sale? A cost of sale is a direct cost related into you selling the product. So to say that a cost of sale is to say that for me to sell this product, I need the material, I need petrol, I need ABCD for me to sell the product. So an overhead could be saying electricity, because it's a general thing, because every product that you're gonna make, you will need electricity for you to make it. So it could be your electricity, could be the rent, maybe if you're paying rent, it could be anything that is over and above the cost of sale. Then we determine that as cost of sale, as overheads. So that's how your statement of profit and loss will look like. So for you to be able to keep a statement of profit and loss that can be audited, whether by SARS or whether you can use it to request funding, you need to keep supporting document for it. So hence why we always say that even if you are running a side hustle, use an accounting software that produces invoices, use a separate bank account where you record when you are buying the things that you need, so you can record them. So you will need to always separate these side hustle. So another documentation that you need to put in place for your finances is an inventory intake. So an inventory intake is there for you to always track out your stock inventory, to say that do you always have sufficient inventory or you do not have sufficient inventory for your business, so you know when you need to go stock up. So the inventory intake, it also actually helps you to plan out your cash flow. So it will also determine to say that, oh okay, it's before this month, so that you do not always buy stock that normally lasts longer for it to be profitable. So you can maybe say maybe you started with 10 perfume and they sold very well, and then you thought, okay, let me buy 20 perfumes, but then in the actual fact the 20 perfume didn't actually sell as much as you expected. So now you normally would say, okay, the last time I sold 20, let me buy another 20, and you keep on buying and you end up having so much stocks with less sales happening. So now you don't see the profitability of it, because all the money goes to you buying stock without actually tracking how long it takes for your stock to leave, so when you need to order up. So it also helps you to plan out your cash flow, to say that after selling this much, then I restock this much, so that you don't spend all the money that you make into buying stocks, and then you don't see the profitability of it. Because really what happens is that it's like, oh, you find out that you're actually running a stock, and then you decide, okay, let me go and buy stock. Then you actually use your own money sometimes, and then you actually use the profit money, and then you don't see if the business is profitable or not, because there is no proper planning of the cash flow of the money that you get. So an inventory stock helps you to be able to track that. So how does this look like? So it's gonna look like, maybe it could be in an Excel sheet, to say this is the amount of stock that I started with. So if maybe you are selling a product, it could be like, these are number of products that I have, and this is how much is left in a week, this is how much is left in a month, so I must always order this much. And also it's very important to always have things in stock so that your customers, they don't wait for you to actually have things in stocks. So the inventory count also helps you to always know that what do you have in stocks. So it will be a number of like description, number of stock, it would be listed there. Say maybe you are selling 2 different things. It will be perfume, it could be maybe you're selling perfumes, lipsticks, any products that you have, so you're gonna list them there, and then it gives you a description. So maybe in perfumes you have different types of perfume, so you will have, say, this type of perfume and this type of perfume. I have 5, I have 6, I have C, I have 5, I have 7, and then after that it will tell you. Then you will have like a spreadsheet where it says week 1, week 2, week 3, week 4. So it measures within a month to say left these 2 went, and then at the end it will show you the total sum. Every time there's 2 left, it will total to say that you have 5, and then 2 left, that means you have 3 left. So in that way it helps you to track which stock is still in the place, and it also helps you to track which stock is most likely to be selling out than the other one that is not actually selling out, so that you do not stock on something that is not being sold out. So you stock more what is going faster to people. So maybe it's a type of perfume, you see that, okay, this one is not being bought much, so maybe let me not stock much of it, but rather stock more of the other product because it moves faster than the other. So it helps you to do that. Also, I want you to also keep a billing statement as well. If you're not selling a product, so let's say you are offering a service, or you're offering a content creation or whatever, so you to always say that, okay, what was sold out more, to say that this billing is this, I did this campaign for this entity, and then I got this much, and then it outlines all the details of what was included in that deal, so that you can also use something similar to check on the next activity that you need to do, it to say, okay, it's something similar, so this is how much money I should be invoicing. And you can use this billing information of the if a person wants a certain type of service, this is how much I billed the last time, and it seems to have worked, to say that if it's this type of service, I billed this much and I got 3 clients out of it, so meaning this is the correct pricing that I should use going forward, so meaning people do buy. So now let's talk about the tax implication of you running a side hustle or small business. So it could be that you are running a side hustle. So if you're running a side hustle, it means that you are employed you have an employment, and you're also running a business. So what it means, let's say you did not register this side hustle as a business, so you're running it on a personal bank account. It could be that you are running it on a separate bank account. So what really happens is that when you are doing your e-filing, there is a box there in the e-filing system where you need to tick where it says local businesses. So you will take that box there in the e-filing system where you say running a local businesses, so meaning you are telling us that in actual fact I do have an income separate from the employer income that I'm getting, which is from running a small business. So that's what you would normally do, and then as soon as you take that, there will be information that SARS require out of you. So it will be that bank statement that I require. If there is any proof, that's where you will upload your statement of profit and loss, and then you will upload the statement where your business is running. So what does that happen after you have uploaded all the supporting document that SARS will be required of you? What it does is that it changes your taxable bracket. So let's say your taxable bracket was on the 300k bracket, but with an extra income that comes in, it changes from maybe you being on the 300,000 bracket to being on the 400,000 bracket. So meaning changes the bracket, so you are being taxed more because of the business that you are currently running. That's still fine and good because you have been receiving income on your money. But what it means is that the money that you've been paying as you pay as you earn from the employer side, where if maybe the employer is paying for you the pay as you earn, it means that it's then underpaid. So meaning you might be required to pay an extra money to SARS because now the bracket has changed, and then the employer has been charging you based on the 300 type base pay as you earn. So you might be required to pay. Now let's say you are running a small business, so you are not having your tax being paid by SARS. So meaning you need to register as a provisional taxpayer. So in this way you are filing your own tax implication, and there are 2 days where you can do that. Let me just remind myself. Those dates are in the payable on the 31st of August or the 29th of February. So those 2 dates you need to always keep in mind. That's when provisional taxes need to do their filing and make sure that they pay whatever is outstanding to SARS. So as a provisional taxpayer, so what it means is that you do your own IFANI. So what they will need all evidence of the income that you receive. So let's say you are running a small business, but as it's just individual, not as a person where you didn't register the entity as an entity. So what it means is that you can be taxed as an individual, and then there will be tax implication that happens. So meaning you have to pay tax within those days, which is 31 of August or the 28th of Feb or 29th of Feb. So those are the days that you need to be paying SARS. So what you normally have to do when running a side hustle or running a business is to always have a saving pocket where you save money so that you can pay SARS whenever it's applicable for you to pay SARS. So that's the most imperative thing about running a side hustle or a business, is to always keep money for you to be able to pay back to SARS whenever you need to do so. So please guys, do not fall trap of you having not been paying SARS because you ate all the money that you make and your profitability. You see, in the statement of profit and loss, after you've done, you must always say that tax amount of money. After you say profit made, you must always save the portion of the tax. So if normally I'll say 25%, just put 25% taxable amount. So every time you make a profit, keep 25% on the side for SARS, so you can pay SARS whenever it's applicable. Because even if you're running as an individual who is employed, the money that you pay is normally not sufficient enough for you to pay the money of SARS. So you must always keep that in mind. So you must always keep in mind to keep money 25% of every profit that you make, so that you can be able to pay back SARS. So now let's say that you have registered this as an entity. So the advantage of registering your side hustle or your small business as an entity is that it is taxed as an entity, and there are benefits of that as well. So SARS is saying that if your entity or your business is earning less than 91,250, then it's exempt from being paying tax. So its chances are, if the profit that you're making on your business that you have registered, whether it's you are running side hustle on it or you're running a small business on it, the profitable amount of profit that you make of 91,250 is exempt from tax, so you won't be taxed on that. So any amount above that, then that's what will be taxed. So that's an advantage of registering it as an entity. So do take into account that it is an advantage when you are registering your side hustle or your business as an entity, because there is beneficial of being exempt from that. So one could also ask, that, okay, I have registered as an entity, I have registered it as an entity, and I do file my things as an entity. There will be date applicable for that as well, but I think they're similar to provisional tax, which is the 28th of Feb and August. So you will need to pay tax on those days. Same concept you need to apply is to save 28% now of every profit that you make, so that when applicable for you to pay SARS, you need to pay that, especially if you see that your income is above the 91,000 that they're talking about. So please make sure that you have a saving pocket for you to pay SARS whenever it's applicable. So another person can also ask, when do I register now to pay VAT or to be a VAT registered entity? So you can register. SARS is saying that if your entity is making more than $1 million, then you have to register as a VAT registered person. So what does that mean? It means that from your selling price, you are charging VAT, and then from everything that you buy within a VAT registered entity, then it reduces the VAT that you need to pay to SARS. So your output VAT is reduced by your input VAT. What is an output VAT? Is the VAT that you charge on the things that you are selling to people. And then output VAT is anything that you purchase within a registered entity for VAT, then they charge you input VAT, so meaning that input VAT reduces your output VAT. So this is when your small business or your business is making more than $1 million a year, then you can register for VAT registering. But SARS is saying you can voluntarily do register if your entity is making over and above 50,000 a year, then you can register for VAT purposes. So you can register only when you have an entity. You can't register for VAT if you are an individual or running a side hustle as an individual. Only when it is an entity, then you can register for VAT. So those are the tax implications that are out there and can affect your business. So guys, that's what I have for you today. If there's any other thing or options or ideas that works for you running your side hustle, that works for you running your small business, please do share them below so that we can learn about them and we can see if they're applicable to us and they can help us into running more profitable side hustle or small businesses. Please do share them on the link below. So this episode, I'm gonna leave it here, and I hope it was helpful, and I hope it helps you as well into your running your entities, that they are more profitable. So remember guys, to always budget for your side hustle, always keep a statement of profit and loss with the supporting documents, which could be anything from your bank statement, the slips, or your invoices that you need. So that's why it's advisable to always consider using an accounting software that keeps all these records for you. So whenever you need to file for SARS, you have these supporting documents through SARS. And then another one, always have an inventory count or inventory statement where you are able to see which inventory sells more than the other inventory. Or if you're offering a service, always keep a bill statement or bill count on to say, on this bill I have 10 clients and it's doing good, so I invest more of my resources on it than the other, so you can see what's more profitable, what is being sold out there, and everything else. So guys, that way you are running your business like a professional person, because even in big entities, that's what we do. We keep records of everything that happens. We budget, we keep statement of profit and loss, we keep inventory count of everything that we need to do so that we can be a profitable entity. So please do that so that you can be a profitable or professional human being who's running a more professional side hustle or running a more professional small businesses. So that is easier for them to expand. It's easier for you to see if what can I do to invest in my business, what can I do to invest in my side hustle, that it becomes the main businesses that I run, and it becomes bigger and mega. And by you doing the small things like these, it helps you making sure that you have all the relevant information you need for you to get funding wherever you need funding from, for you to apply for all of those things. So guys, please do keep that in mind, and thank you for tuning in again. Please don't forget to subscribe and like the channel. Bye for now.